Today, crypto markets bounced to start the week. An ethics memo reveals crypto czar David Sacks sold more than $200 million in crypto-related holdings before taking the White House job. And Bitfarms CEO breaks down the details of its now completed acquisition of Stronghold Digital Mining. Welcome to CNBC's Crypto World. I'm Ryan Baker. Crypto markets slightly in the green to kick off the week. As of noon Eastern, Bitcoin traded around $83,500 after falling below the $84,000 level over the weekend. Ether climbed more than 1% to just under $2,000, and XRP rose nearly 2%. Okay, let's talk about the top stories. A White House memo reveals that President Trump's AI and crypto czar sold more than $200 million in digital asset-related investments before taking on the role. The disclosure shows that David Sacks liquidated stakes in crypto and related assets both personally and through his firm, Craft Ventures, before starting as crypto czar. This memo notes that of the assets sold, at least $85 million is directly attributable to Sacks, and that Craft Ventures remains an investor in some other funds that have crypto in their portfolios. In a podcast earlier this month, Sacks said he sold the crypto because he didn't even want to have the appearance of a conflict of interest. The comment came as he was responding to criticism that had been levied by public officials, including Senator Elizabeth Warren, the top Democrat in the Senate Banking Committee. Recently, Warren sent a letter to Sacks raising conflict of interest concerns and calling on Sacks to disclose any financial holdings in crypto. Next, OKX is suspending some services after detecting misuse from North Korea-backed Lazarus Group. The crypto exchange announced on X last night that it is temporarily pausing its decentralized exchange aggregator and is implementing new security features to address unsuccessful efforts by Lazarus Group to misuse its DeFi services. OKX said wallet services will remain available to all customers, but that the creation of new wallets will not be available in select markets for the time being. This comes after Bloomberg reported last week that European Union regulators are scrutinizing OKX for offering the now suspended service. The industry is on high alert after last month's record-breaking $1.5 billion hack of exchange Bybit, which is also linked to Lazarus Group. Bybit CEO Ben Zhao revealed that a portion of the stolen funds ended up on OKX Web3. Last, it seems like South Korea might take a pass on establishing a strategic Bitcoin reserve. That's according to a report in the Korea Herald, which cited Bank of Korea officials. The South Korean central bank has called for a, quote, cautious approach to the idea of potentially including Bitcoin as foreign exchange reserves. A big reason? Officials reportedly point to high volatility in the price of Bitcoin, saying due to instability in the crypto market, transaction costs to cash out Bitcoins could rise drastically. Another reason reportedly cited by officials, cryptocurrencies do not meet the criteria for foreign exchange reserves set by the International Monetary Fund, things like credit ratings and liquidity. Earlier this month, here in the US, President Trump ordered the creation of a US strategic Bitcoin reserve and digital asset stockpile. The announcement sparked increased global dialogue on the role of crypto assets in national financial strategies. All right, turning to Bitcoin mining for our main story. Today, Bitfarms announced it's completed its acquisition of Stronghold Digital Mining with the goal of strengthening the company's position in the US. It's something we first told you about back in August here on Crypto World. Well, now, 7 months later, the merger has been achieved. And as of today, Stronghold is no longer a publicly traded company. The stock has been removed from the NASDAQ. The move secures a 1.1 gigawatt growth pipeline in Pennsylvania for Bitfarms. Crypto World's Jordan Smith spoke with Bitfarms CEO Ben Gagnon all about the acquisition, what it signifies, and what happens next.
Bitfarms completing its acquisition of Stronghold Digital Mining, which you announced back in August for, I believe, $175 million. Tell me about this deal and how it shifts strategy for Bitfarms.
Yeah, happy to. And thanks for having me on, Jordan. It's a really exciting deal here for Bitfarms. What we're enabling here with this transaction is we're acquiring 2 stranded power plants in Pennsylvania, as well as a huge pipeline for energy assets in the United States. For us as a company, we've always been a very internationally focused company. We only had about 6% of our operations in the United States last year. By the end of this year, with this transaction and a few other things we're doing, we're going to be 66% of our operations in the United States. So really transformational deal for us. Opens up a world of opportunities beyond Bitcoin mining, especially on the HPC side of things, where these 2 sites are very strategically located. And for us as a company, completing this, the largest merger ever between 2 public Bitcoin mining companies is a major accomplishment. and really sets us up well for the years ahead.
Yeah, there's so much to talk about there, from energy to high performance computing. I want to start with the AI front and AI applications. How is the growth of that business going for Bitfarms, and how does that as a priority stack up compared to Bitcoin mining? I know this is probably a ways off, but is there ever a world in which Bitcoin mining becomes a side hustle, so to speak?
I think that world is here today. I think a lot of the industry is looking at that specific opportunity. And I mean, it makes sense from numerous perspectives. You know, obviously, Bitcoin price is very volatile. And when you're planning your business and you're not in control of your revenue, it makes it really difficult to plan on a multi-year horizon. What the advantage is with HPC is that you've got visibility 5, 10, 15 years down the road. You can make the investments now and know that they're going to pay off in the next 3-5 years. You can secure financing, and it really enables the businesses to think on a much longer term basis. I don't think that means that Bitcoin mining is going away, but I think when you're looking at how do you structure your business and how do you build it, how do you build value over the long term, this HPC provides really, really strong foundation for companies to build off of. And then Bitcoin mining might come in here as an absorber of inefficiencies, right? I think the future is probably going to be maybe something like 70-80% HPC with maybe 20 or 30 Bitcoin.
Well, in terms of building out that HPC infrastructure, you know, one of the short-term things that we're watching right now are tariffs, especially ones that hit chips that could affect both AI and Bitcoin mining businesses. Have you seen an impact to your business from these trade tensions right now, or how are you mitigating them if they continue to escalate?
Yeah, so it's a great question. You know, tariffs are always something that are a big thing that to work with when you're importing lots of equipment. You know, specifically, the tariffs haven't impacted us too much. We don't expect them to impact us too much rolling forward because our focus is really on the energy infrastructure. And when you look at what's the bottleneck of growth for an HPC data center, you know, I know a lot of focus is placed on NVIDIA and the GPUs and the chips themselves, but the real bottleneck for growth in this industry is not the chips, it's the megawatts and the data center infrastructure in order to make them run. You know, that's the area where a lot of data centers just have not been making the investments over the last couple of years to have the energy density that the new level of compute requires. And, you know, it requires maybe 12, 18, 24 months to build out that kind of an infrastructure. So it's timeline to energization here is what's really driving value and is the real bottleneck for growth. And tariffs don't come into effect very much in that situation.
You mentioned energy earlier as a big reason for this acquisition. And I think that also goes into a policy conversation I want to talk about. Obviously, so much is changing in the United States, and one of those areas is energy. You know, Bitfarms has talked a lot about energy efficiency. You've also talked about, you know, relying heavily on hydroelectric power in the past and other renewable energy resources. Is that still high priority for you going forward in your U.S. expansion, given the changing regulations? What are you thinking about in terms of that growth of energy?
So managing our energy is crucial for us as a business, right? As I said, when you don't control the price of Bitcoin and we're not controlling our top line revenue, that places an even greater emphasis on controlling our costs as a business. And as a Bitcoin miner, you know, 80 to 90% of our costs on the OPEX side are going to come from the energy costs. And so if I can control my energy costs, whether it be through curtailment or hedging programs or, you know, a variety of methods that we have here in the PJM market, you know, that's going to create a lot of flexibility for me. That's going to help me as a, you know, us as a company have strong margins for us to grow off of. So having your energy is really, really crucial. The, you know, opportunity that's present here in the United States, I think, is that for decades, all of this energy infrastructure which was built to power American manufacturing, started to get really underutilized because that manufacturing went offshore. It went to Asia, it went to, you know, all these other countries. And over the last 4 or 5 years, it's been the Bitcoin miners who are seeing these, you know, underutilized assets. They're seeing cheap energy, and they were making the investments in that infrastructure. Now that the pendulum is swinging back hard to the U.S. and there's a big focus on, you know, onshoring and bringing American manufacturing back to the United States, It's companies like Bitfarms and these Bitcoin miners who've invested so much into these hard energy assets that have what everyone wants right now, which is a lot of energy, cost effective and available, now or in the short term.
Yeah, what you're talking about is what the crypto industry has been excited about across the board, which is a real about face in terms of U.S. regulation about welcoming the crypto industry. What are you looking out for at Bitfarms in terms of crypto regulation? Are things like a strategic Bitcoin reserve really going to move the needle for you, or what is your focus right now?
So for us, really, I think as a crypto business, our biggest objective here would just be to and it's not even about special treatment. It's really just about not having the specific targeting against our industry. I don't think we're looking for a lot of handouts or favors. We just want to be treated fairly like all other industries. And I think if we're able to do that, then there's going to be tremendous amount of promise in the United States because people want to invest here. They want that regulatory certainty. They want that clarity. They want to know if they're investing, 1, 10, 100 million, whatever that is, that, there's not going to be a change in policy that undermines the entire investment. And so just having that certainty, having that clarity and not having a hostile regime in place, I think is going to open the floodgates for investment in crypto in the United States. We'll see what happens on the strategic Bitcoin reserve side. I think anything that happens there is going to be positive for the price of Bitcoin. But we're not relying on that as a business, and none of our investments in the United States are relying on a strategic Bitcoin reserve.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.